Good morning, folks, and welcome to today's video. So today I have three pairs on watch. Those are pound Aussie, pound CAD, and pound dollar. So it's all about the pound today. So I'm going to break down my favorite of the bunch first of all, which is pound Aussie, and I'm going to start as always from the higher time frames. So I may not place a trade today. The market may not provide an entry, as it hasn't for a couple of months now, where my entries and what I've been taught to look for are concerned, but especially with the Christmas period. But if it doesn't, that's absolutely fine. I'm not here to get rich quick. I'm here to stick to what I've been taught to do, and if what I've been taught to do doesn't provide an entry, then so be it. I'm not bothered. But anyway, we start on the weekly chart rather. So what do I see? I see this sharp hook point, which we sold off from aggressively from last time around, giving me a clue that there's a lot of liquidity here. We come back up, we move up in a very non-progressive way. Okay, this is non-progressive price action. We wick, we come close to the area but near miss it by way of this wick. We come back up, fill the wick, take out the orders that were there, catch people the wrong side of the market who believe what was previously resistance becomes support once it's broke above, and then we come crashing to the downside. So we break out of all of this afterwards, which is exactly what I would expect to see. Okay, price comes down. We have this sideways correction. Price moves to the downside. But what happens? It near misses to this low here or this low here. Just not including this wick because it's kind of a bit of volatility if you just look at that. But we certainly near missed to the start of this piece of structure, okay? By way of that wick there, giving me a clue that at some stage, we don't know when, we'll likely take out this low, this wick here, and the low that we wicked to or narrowly missed. Okay, so then we move to the upside. Price moves to the upside here. Again, I'm not including this wick because it just looks like volatility. If you switch to the line chart, it doesn't appear, and it looks like if you just look at this price action as a whole, it just looks like a bit of an anomaly. Okay, relative to all of this. Okay. But regardless, what happens? We come back up, we take out this high, we even tap into this wick as well, break above, catch people the wrong side of the market, and then push to the downside aggressively. Okay, and then we have that impulse correction continuation, and this low here, which either would act as a reversal area or more likely an area which people would take profit at. So we have no need to move to the upside at this moment because we've broken above here and even above this wick and come crashing back down beneath them. So I'm just seeing this as a potential play from my area of value, which will become clearer as I drill down to this area where I would likely take profit or trail my stops, and where we would likely form some kind of deeper correction. As we drill down, you can see a lot of volume was built up here. So it wouldn't surprise me if this volume that was built up here acts as a bit of a catalyst to help price move to the downside. If we just measure even if we took it from here, the impulse to the start of this correction, and we assume that the leg out is of a similar length, that would take us down to here and actually take us down to this low here. Okay, so and if we took it to the break of this correction, because often, as I said, the volume that is built up within these corrections can dictate how far price moves down, that would take us down to this area as well. So sometimes the volume that's been built up can help our trades move in our forecasted direction. As we move down, you can see what happens. We break out of all of this structure here. So if I just do this crudely, we break out, price comes back up, it retests all of that volume, moves down, we have a correction here, and then you can see we're forming this separate correction here, and the start of this correction is here, which is why my area of value is there, okay, which would just so happen to be as well, just to touch on it, would just so happen to be the retest of all of this as well, where price would likely gravitate back towards, especially if you just look at we've got quite a bullish daily there. Yesterday's daily was quite bullish, and the weekly at this moment in time, this isn't a a closed candle. Obviously, this is the active candle, but at this moment in time, this is looking quite bullish. So it wouldn't surprise me if we find our way all the way back up to here, tap into that area, retest the back end of this, and then move to the downside to take out this low here, which price near missed to. Okay, so with that in mind, what I'll be looking for, if I unhide the forecast, is the following. Okay, I'll be looking for price to tap into the area of value, followed by a push down on the flag, and the correction afterwards is usually the banks and the bigger players stacking their orders for the next move to the downside. If you just look at this wick near missed to here, this near missed to here to some extent, so it wouldn't surprise me if we come back up, tap into this area, push back down, and if we do, then I'll be looking to get short on the break of a flag such as this, or within it, and then I'll be able to manage it down to these lows for something in the region of 6.5% as a solid first target. I've got 2 alerts on the side there. I've got one here because if price comes close to this high, let's say we come down like that, we come close to there and we start pushing down, then I shall just take this off of watch. So I've just set a second alert there just to see how price reacts from this area, because if it starts pushing down from there, then this is likely becoming more complex, and I shall just take this off of watch, which could happen certainly at this time of the year as well. So that's what I'm going to be looking for from pound Aussie. If this setup, and of course if this alert is triggered, then I have another alert to see if we actually push up to the area of value. If we do not, then I will not be looking to place a trade. That is pound Aussie. So on pound CAD, I'm kind of going in the other direction. You might be thinking, well, why would you be shorting the pound against the Australian dollar, but trying to get long against long on the pound against the Canadian dollar? Well, this is where people fall short a lot of the time. There are 2 currencies involved. This is why these are called currency pairs and not just a currency. There is also the Canadian dollar involved, and if you actually, I'm not going to do it now, but if you actually study the Canadian dollar on across other currency pairs, the Canadian dollar is looking particularly weak. Okay, so what does that mean? That means that we may be able to capitalize on a long on pound CAD and essentially just play, because I'm looking to get short on the pound against the dollar as well. But on pound CAD, I may be able to play the weakness of the Canadian dollar against the pound and use the structure to help me do that. Okay, and I shall explain how. So right, on the higher time frames, we tap into this low here, which price near missed to. We near missed to that. That near misses to that. Eventually, we come back down, take out all these lows, tap into the area which for many of the bigger players would have represented a high area of value for a buy, discounted bargain prices when we broke below. We tap below, wash out all the orders, push to the upside, and then we have that impulse correction continuation, which is pushed higher. Okay, so we're above this low, we're above all these lows now. We tapped into the liquidity that was there, caught people the wrong side of the market again, and pushed to the upside. And if you just look at this, another reason why I'm looking to get long, so we near missed to this low. Okay, what happens? We move to the upside, we come back down, we tap into it. Okay, and then we move to the upside. This low tapped into this low, moved to the upside. So there's no reason for price to come down and retest these lows at this moment in time. And as we drill down, things get a little bit clearer. Okay, so we tapped into that low. We also have a near miss to here and a near miss to here. Okay, often these near misses get filled. So it wouldn't surprise me, particularly as we've broken below here now. Okay, we came back down, tapped into this area. Yes, we've kind of near missed to here, and that is a factor in my thinking, which I shall touch on in a minute. But you can see, look at this daily candle here, this solid, very, very bullish daily candle, and look how the weekly is looking as well. We've tapped into this consolidation, giving me a clue that if we just zoom out, which is what a lot of people don't do, that we're likely coming up to take out this high here, which near missed to this, and this near missed to this high. Okay, which is why I've got my arrows pointing all the way up there. As we drill down, you can see that this was also this consolidation here that we've just tapped into. There's a lot of volume here, okay, and it was also the causation of the move which broke out. This low was also the causation of the move which broke out and caused price to rally all the way up to here. Okay. The thing we have to pay attention to, though, is I was just saying that this low here near missed to here, and this is another low which is actually visible on the daily chart. Okay, so we near missed there. Okay, so what this could be, if we just look at what price is doing now, this could be, this could be a larger bear flag to tap into that high there to push lower. Okay, so we do something like that because we near missed to here. Then we have something like this, which taps into here. We may even get a reversal structure. So if we just take that off the chart, we could even get something uh, like this, where we end up with a reversal structure, which taps into that low before pushing higher. Okay, because I don't want to get caught up into that, what I will be looking for specifically. So what would mitigate the chance of that happening? What would be our mitigation factors? The mitigation factor, as I see it, would be quite simply a break above here. Okay, so if you was to, for example, if you was to try and get long within a flag such as this, or on the break of it, you could be tagged in, tagged out, and then price does something like that, becomes a bear flag, and then pushes lower down to that next inflection point before pushing higher. Okay, if that makes sense. And if we just zoom out on the higher time frames, we would be down there and we would have tapped into that low, which this low near miss 2, and then we start moving to the upside to take out these near misses. So to prevent the likelihood of that happening, what I'll be looking for specifically is a break above all of these highs, and then if we were to get a correction afterwards above these highs, so it would probably be a little bit higher now, given where this consolidation is forming. This would likely, if it was to happen, give price the legs, as it were, the volume being built up here would likely cause this to break out a little bit higher, especially with what the last daily close looked like. And if we got that and got a correction afterwards, the correction afterwards would imply that the bigger players are stacking their orders for that next leg to the upside. And it would also imply that price did not find enough liquidity at these highs here or just above here to send it to the downside. Okay, so that would be my mitigation factor. And if we actually just look at this on the 4-hour chart, you imagine what price would be looking like at that moment in time. If we were up here, the daily would look very strong, the weekly would look very strong, provisionally at least, and then we will likely take out these highs up here which I was talking about earlier. So that is pound CAD, and that's how I can essentially play the weakness of the Canadian dollar against the pound in this instance. And I have an alert set just above the area of value. If that does not trigger, then I will not be looking to place a trade. I'll not be getting trapped into the market here, which this could easily be a trap. So I'll not be looking to get long until price breaks above the area of value. So that is pound CAD, pound dollar. If we just zoom out, so on the higher time frames, you can see that we have this kind of. I'm just cutting through that wick again. Okay, that wick there. But we have this 1, 2, 3. There's 1, 2, 3 touch structure. We have a middle section within that. Okay, giving me a clue that this is a completed piece of structure. Okay, we break below, catch people the wrong side of the market again, and then price rallies to the upside, and we have that impulse correction continuation to put, which pushes higher. We come back down, we tap into these lows. Okay, we consolidate there. The consolidation in this instance gave this the legs to push higher. We push up, so there's no need at this moment in time. We're trading well above here now. Okay, there's no need for us to come all the way back down here. Okay, but as we drill down, there may be a little short opportunity to the downside which we can capitalize on. So as I drill down, we can start to see that we have this. So we broke below here, consolidated, pushed up. This is the first thing to touch on. One of the reasons we may be able to capitalize on a move to the downside is because this is not typical when we tap into an area of value. We don't normally move up like this. This is non-progressive, okay? So the fact that this move started with non-progressive price action also implies a short-term move to the downside, okay? What do I also notice? We also have, so we're always looking at the sequence, we also have this consolidation here, okay? And this this high here, when there was an exchange of liquidity here last time around, there was enough of an exchange of liquidity to cause price to blast through this previous structure, suggesting that there may be a lot of liquidity here. Okay, the other thing that makes me think that is because if you just look at this, we also priced near missed to this area. Okay, so we near missed to the area. Price took out this high, but it failed to tap into that high, and now it looks like we're coming up to give us this kind of 1, 2, 3. Where we'd have this 1, 2, 3 touch structure. This becomes the middle section, and then we can potentially capitalize on a move down to here, and then either price corrects in that area or we see further continuation to the upside. But I'm not really concerned about that at this moment in time. So all those things put together give me a clue that we may be able to capitalize on a potential short-term short, okay, or shorter term short, okay. So you can see that we've got some momentum on the daily. I wouldn't be surprised if this pushes a little bit higher. I'm just kind of disregarding this wick as well because one, even if this was a high, although we've near missed to it, the price did not find enough liquidity to cause it to break through here. And also, if you just look at this on all time frames, I believe that this just appears as a wick on all time frames. Okay, this high here. It's a bit difficult for me to zoom in. There we go. But on all time frames, this appears as a wick, giving me a clue that that is just volatility. Okay. What am I doing here? Right, there we go. So if I unhide the forecast, what I'll be looking for quite simply. So when I did my forecast, this was last night about 8:30, which is when I usually do my forecast. I can get this alert off the chart now because that doesn't need to be there. That was when I was looking for longs for price to take us up to this area, but didn't manage to get an entry. Okay, look at how price has got to the area of value. It's got to it. Looks like it. Look at these low momentum candles, giving me a clue that we may be able to capitalize on the price is kind of running out of steam. So I did this forecast last night and price was about here. It was conceivable that price could just drop out, which is why I've got two forecasts here, my preferred one and my least preferred one. Not that I don't like it, just least preferred. So price could have just dropped from here because it was already at the area of value, hence why I put this one on. But what I thought was more likely, because as I've touched on previously, we normally catch people the wrong side of the market of these higher time frame highs. Okay, on the higher time frames, usually we break above before moving to the downside because people get themselves caught the wrong side of the market when they hear things like the pound dollar is at a 1 year high or words to that effect from the broker platforms who try to dupe people into a bit of FOMO. So it's no surprise to me that we've broken a bit higher. So what I'll be looking for now, if we just break back in, okay, and we get a flag afterwards, then I will be looking to get short on the break of the flag or within it. So what I'm going to do on the flight is I'm going to set an alert there to see if we break back below the area of value, which will imply that people have got themselves caught the wrong side of the market. And then I'll be looking for a correction afterwards, and then I'll be looking to get short on the break of the correction or within it, and then I'll be able to manage it down to the start of this consolidation here for something in the region of 7 to 8%. And of course, I would have a slightly tighter stop loss if I managed to get a risk entry within, or I would have a 10 pip stop loss. But anyway, I'd be able to manage it down to those lows quite easily. So that's what I'm going to be looking for now. Thanks for watching, folks. Have a great day, and I'll speak to you again soon.